Should you invest in residential or commercial property in Dubai? Most investors, especially my investors, they don't even consider commercial as an option. They assume it's too expensive or too complicated. It's only for big corporations or people with really deep pockets. But while they're chasing sort of 5 to 7% yields on apartments, commercial investors are locking in 10+% net yields on office space. If you know anything about Dubai, prime office space is actually near total occupancy. Some towers, they actually have waiting lists, and the supply shortage is only tightening. I've sold multiple commercial units myself, and I've been tracking all the major transactions across Business Bay, DIFC, and of course the surrounding commercial hubs. So in this video, I'll walk you through the ultimate guide to Dubai commercial property in 2026. I'm also going to take you to a number of sites in Business Bay where the opportunities lie right now, and a ready grade A commercial property that outperforms the market regularly. And not only that, I'm also going to show you the actual numbers on what kind of returns you can expect when you do this properly. But before we dive into the opportunities, I need to address the biggest mistake I see investors make when they first look at commercial property. So most investors, they approach commercial property the same way as other investors approach residential. They think it's just like a bigger apartment with higher rent, so they use the same criteria: the location, the amenities, developer reputation. Of course that matters, but you completely miss what actually drives commercial property performance. Residential property, it's about lifestyle, location, what's in the building, but commercial property is about business economics and of course tenant demand. So with residential, you'd be thinking like, well, would someone want to live here? Does it have enough amenities? Is the pool big enough? With commercial, you're saying, what type of businesses need space in this area? Who am I targeting, and can they afford these types of rents? And the metrics are different too. Residential investors focus on capital appreciation and, generally now in today's market between 5 and 6, maybe 7% yields. Whereas commercial investors, they look for 10+% net yields, longer lease terms, and of course, business to business tenant relationships. If your tenant isn't a family who might break their lease, it's a consultancy firm or a lawyer firm who are signing potentially a 3 to 5 year contract. The market structure is also completely different. There's generally two models in this city. You've got build to lease, which is mainly DIFC, so you're leasing institutional grade A long-term leasing space. But then you've also got the build to sell, which is massively undersupplied, but in areas like Business Bay, on Sheikh Zayed Road, potentially in downtown, where you can actually own the office and control your asset. So it's yours. Now, here are some facts you should also know. Office sales transactions over 10 million dirhams surged from 27 deals in H1 2024 to 83 deals in H1 2025. So it's no longer speculation. It's real businesses needing real office space. So if you are serious about commercial property, stop thinking like a residential investor. Start thinking about business demand, lease terms, potential tenant profiles, net yields after all costs, because there are some extra costs. And that's what separates successful commercial investors from those who, which you can do, overpaying for the wrong assets. Now, I've spent months analyzing transactional data. I meet with developers regularly. We track projects. We see who's actually delivering the returns. We see where the demand is. We see what kind of tenants want to be in these types of places. Now, if you want to stay ahead of these market movements, I've created an exclusive WhatsApp group where I'll share real-time updates on projects. I'll share opportunities that come up, and all what you need to do is join the link in the description. You're welcome to join. It's completely free. Now, I've spoken about Business Bay on my channel before, and I've spoken about residential, especially studios and one bedrooms, being rather oversaturated. And a lot of people took that maybe I shouldn't invest in Business Bay at all. But that isn't the case. Business Bay is actually the hub of business. It's going to remain that way, especially for tier 1 companies looking to establish a serious footprint in the market. This is where the growth is happening in this area right now. Around the COVID time, when there were plots of land that were being sold, they were being sold off to residential developers, and that's why there was so much growth in that sector. But no one thought after that time, 2020, that so much commercial was going to be so popular. And now, let's say 90% of the good plots are gone and there's only 10% left. Developers who have the opportunity are actually building the commercial. So it's a very limited product. Now, Business Bay as well is showing a 21% compound annual growth rate in the office space. Over 1.3 million square foot of new space is being added, and the investor appetite for owning floors is growing. So the reason for this is that, as I said, there's so little grade A office space in this location. You see, DIFC is built on a build-to-lease model, so a lot of the properties in that flagship district can only be leased, especially in true grade A buildings. Go and check yourself. Go and look how many grade A buildings are for sale in DIFC. But you see, in Business Bay, because it's a build-to-sell model, investors have the opportunity to rent those offices out to incoming tenants, long-term established businesses. So if you don't fully understand the commercial market, you might automatically assume that you should only be buying in the financial district, but realistically there's barely anything to even purchase there anyway. You can't actually buy any off plan because there's none available there right now. And I'm not saying Business Bay is the only location, but it's just one of the locations that has stock available and gives investors the everyday opportunity to enter the commercial market with real ownership, real appreciation, real potential, and actual demand from companies looking for long-term spaces. Now, a lot of investors, they hear about the old GDP growth and they think these economic terms, they don't affect their investment. They don't realize how direct economic expansion links to office demand. So Dubai's GDP grew 4% in 2024 and is forecast to reach 5.1% in 2025. That's insane. That growth isn't just coming from one sector either. It's being driven by technology, logistics, construction, real estate, tourism, financial services, and now we're seeing a big push on AI and data centers. You see, every one of those industries at some point will need a physical office space. Now, on top of that, I've personally seen so many families relocate their entire wealth to Dubai who I'm dealing with on a daily basis, and they're setting up here, they're laying their roots, they're moving with their families, moving their businesses. And generally, they may start off, not necessarily needing or thinking they want an office, but then they see the growth in Dubai and then they realize, well, actually, I could probably set something up here, have my own office, bring my team, bring my operational structures. And then all of a sudden, it's like, actually, this is a great place to own a business and have an actual office space because there's such a push on pro-business in Dubai. And the UAE Central Bank, we can't forget that they're forecasting a national GDP growth rate of 6.2% in 2025. And then that's not to mention 58% of transactions in property came from international investors. So global companies, they're consolidating their regional operations in Dubai because of tax, regime, regulatory stability, and business-friendly environments. You want to be putting your money where the growth is happening. And if the GDP is expanding at 5+%, driven by different sectors, you know what happens? Office space naturally follows. So this is where Dubai's commercial market is riding a wave of macro growth. Some investors, they always worry about oversupply, and it's very right they should. They see a lot of construction and cranes, and they assume Dubai is building way too much, and then they would probably categorize office space too. So they would sit on the sidelines, they're waiting for a correction, like everyone always wants to do in any market that's booming. 185,000 square meters of office space coming to Dubai in 2025 and 230,000 square meters in 2026. That seems like a lot, but prime office spaces right now are already at near total occupancy in the right building. Business services, that's actually 38% of the demand. Technology services, 31% of the demand. Just those two sectors alone, that's 69% coming from high growth sectors that are not slowing down. They're actually speeding up more rapid than anyone can imagine. Don't confuse construction activity with oversupply, especially when you can't see the difference between residential and commercial. Occupancy is at nearly 100%, and rents are rising 27% year on year. That's a supply shortage. It's not slowing down. But now, while there's still inventory available, you need to be making a fast move. Knowing the market is hot doesn't help you if you don't understand who's actually renting these offices, right? Because your investment success, well, it depends on understanding who you're renting to. What's the psychology behind it? This is where we dive into things a little bit deeper. What type of sectors are driving the demand for office space? Because it's all well and good saying Dubai is a busy place, but what businesses are actually occupying this space? So we broke it down, okay? These are figures that we've taken from verified sources. Business services take 38%, all right? Including consultancy firms, legal services, cybersecurity, PR, professional services. This is the largest sector driving the most demand, and this is only growing. Then you've got technology services, fintech, IT, AI, SaaS businesses, high growth sectors choosing Dubai for regional expansion. They're taking up 31%. Then you've obviously got real estate, as you know, huge industry out here, but they're actually only occupying 12%. So then you've got banking and financing, 10%, and then the rest, 9%, is your healthcare, logistics, retail, and mixed professional sectors. So what does this tell you? This tells you that it's not just one specific sector driving the most demand. It's because the business services is such an array of different types. It's not just like only real estate are demanding the office space, because then you would heavily rely that all real estate agencies are going to keep renting the office space. No, they only account for 12%. You see where I'm coming from with this? We analyze what type of tenants and what type of services are driving this demand. Okay, these are very important things to note. Investors all assume commercial properties in Business Bay are basically the same. They look at the location, Business Bay, and then they check the price per square foot. And what they do is they make decisions without understanding how the positioning of that particular building or project and the target tenant profile actually determine the performance of the asset. So let me break this down clearly, because each project sits in its own lane and attracts a very different type of tenant. At the top, you've got projects like Lumina and Lumina Alta by Omnia. These are trading around 6,000 to 7,000 dirhams per square foot with the potential, in my opinion, to hit 10,000. They're not even grade A, they're ultra luxury. These are built for Fortune 500 companies. This is like world-class amenities, a developer with one of the strongest track records in the city who literally build the peak of luxury. Now, again, this is a very specific investment. This is, in my opinion, a trophy asset to hold. And they're only selling full floors in here, and the prices are generally starting from 40 to 50 million dirhams. But if you're an investor looking to hold on to an asset like this, by almighty, I believe this will be the best office space in the world. And I've done extensive research on the most luxury offices in the world, and nothing compares to this design or quality, trust me. It is insane. But with that, it does come with a big entry ticket. Next, you've got the mid-premium bracket, which is between 3,500 and 4,500 dirhams per square foot. And in particular, you've got one project which stands out to me, and it's the Burj Capital. I've sold multiple units there. It's a beautiful grade A building, and it's situated in Marassi Drive, which is a key part of Business Bay. This type of office would appeal to your family offices, your law and tax consultancy firms, your legal practices. These are the types of people that we see going into this type of product. Now, in particular, the units that we sold are sold shell and core. So that would be up to you whether you want to fit it out yourself and rent it out, fit it out, or you can leave that up to the tenant. Now, the beauty of leaving it up to the tenant is that you're probably going to get a long-term lease, all right, between 3 and 5 years. That's what we generally expect. But even if you fit it out yourself, you can command more of a premium and you stand out. So it's up to you which strategy you go down. And that's where we will work with our investors to decide at the time what's the best approach. And then there's another building that I want to point out. This is by Earth Developers. It's a collaboration with Rove. It's more like a branded building. This is a entry-level opportunity because the unit sizes are much smaller. They start around 700 square foot. Although the price per square foot is the same, they trade around 3 million as a starting point, and it focuses heavily on amenities, multiple workspaces, wellness areas, a modern environment, which in my opinion would attract more your startups, your AI firms, your tech companies, your PR agencies and media, because they come fully fitted out and ready to go. So you open up to a completely different tenant profile. But I wouldn't put a family office in there. I wouldn't put a law consultancy firm in there. So these are the things we have to establish. And you've also got towers like AHS Tower. You've got Sol Lux, which is in the similar bracket, and each with its own angle and each with its own targeting of a slightly different tenant. So basically, my job as a consultant is to match you to the project and the position you want in the market.
So right now we are on Marassi Drive. This is a very key location within this district. We see a lot of office space around this location, but grade A office space, very limited. And that's why, as I say, and I'm going to break down the numbers, the Burj Capital is such a prime piece of real estate to own, especially in the commercial sector. And I'm very excited to see what happens.
So as I previously mentioned, we wanted to take down a real life example of a property that is available to purchase off plan. Now, in a project that I've sold already, which I mentioned before, is Burj Capital. All right, so we've got Business Bay, shell and core office, 2,379 square foot. The purchase price being 10.29 with a 4,325 dirhams per square foot cost. Now, these are all the costs incurred, all right? So you've got your purchase price, your DLD, your admin fees, and your VAT. Okay, this is important. You're always going to pay 5% VAT, okay, on your purchase of commercial space. Now, if you do own a company and you're buying it in a company's name and you are trading actively, well, then you can always claim the VAT back, all right? But if you're just a sole investor, you will be subject to pay that. But again, we're calculating all of this in our net ROI, so don't worry. So your all-in cost is going to be 11.21 million dirhams. Now, this is on a 50-50 payment plan. Completion date is around 2028. Now, let's dig into the ROI. So when we work out the net operating income, we've got the gross rent, which is 500 dirhams per square foot, okay, which is about 1.18 million dirhams, all right? Okay, but how are we getting to this figure? We're taking real-life transactions from grade A commercial space in Business Bay and surrounding areas and using a conservative example. If you go and look at the transaction in Business Bay across the board, that number is actually going to be a lot lower. But also, if you go to Business Bay, and even if you wanted to go onto a property finder website and actually see what office space is available, I mean, grade B, grade C, grade D, however you want to grade it, but it's very, very low quality. There's only a couple of buildings that are able to achieve this price per square foot because there simply are none. All right, but this Burj Capital will 100%, I believe, get to this figure. All right, so then you got your service charges, which are around 47,000 dirhams a year. That leaves you with a net rent of 1.142 million dirhams. So your net yield, 1.42, take your purchase price, including all your fees, you're looking at a 10.18% yield. All right. So that's a 10.18% net yield after all costs. So if you compare that to general residential apartments right now in the market, seems pretty low, right? Now, of course, these are all things that you want to consider. And again, we build out a strategy to make sure that when we are buying in these buildings, we're buying the right unit in the building as well. Now, it's one thing understanding the economic drivers for the commercial space and also the numbers behind the projects, but now it's actually time to execute. Where do we go from here? That's why I'm giving you the opportunity to book a one-to-one call with me, where we can help you find commercial office space from 4 million dirhams and above, and we will help you invest in the right commercial space so you can get similar returns to these ones. Knowing exactly how Dubai's commercial property market works is just one step, but you still need to have a broader knowledge of Dubai to get your investment strategy right, because there are 3 fundamental questions that every investor needs to answer before putting any money into the Dubai real estate market. And if you get them wrong, even the best commercial property can be a mistake. So watch this next video where I break down the critical foundations you need in place before making any investment decision in this market.